Traders, this is the Dow on the daily chart, and we are just narrowly above the 17,000 mark, potentially going to break down the 17,000 mark. We've got US weekly jobs today. This market is very thin, very light volume, and setting at the highs. So we have a distribution pattern here. We've potentially got putting in a double top here. So yesterday we held up, but only just. So if we're coming down into this hammer-like bar and we're going to hold, we can close above this level today, then I think we can get going. Otherwise, we break down, we close under 17,000 today after weekly jobs, and short term we are toast, and we are going to start to eke our way down to these levels, 50 EMA, support level, and so on. So very choppy, very light volume. We've been range bound for quite a few weeks. It's the 22nd of August since we popped up here. Okay, markets are range bound 85% of the time, so be aware. Let's have a quick look at the Nasdaq to compare. Nasdaq is holding up a lot better, with Apple seeing a bounce yesterday, and the S&Ps, similar to the Dow, just sitting just under that 2000 level by 11 points, but looking vulnerable. And you can see from this fib level, we've come under this 161 level, and we're just sitting under there. In the meantime, Japanese Nikkei, they have committed to aggressive easing and negative interest rates, so the markets are liking it despite very poor figures, and they're trying to hold this up. I am not convinced they can do it. I think all we're doing is about to hit a major resistance levels, and with the sort of figures they're putting in, minus 1.8 for GDP, I am very doubtful that the market will hold that up. So we're already, as I speak, in just after the Euro session is drawing to a close, and we're into doldrums. Well, so-called doldrums. This is moving quite nicely under the 17,000 at the moment. In the meantime, this pound yen has come off the 50% fibs and seen a nice move, but all we're doing at the moment is retesting this star where we dropped down from. Markets have got a habit of dropping hard and retracing back to where they fell from. So how we handle this 350 will be crucial. And we've got a gap to fill on the pound US, so weak jobs I think could see this push up. I mean, typically this is the time of year when we do begin to see a push up in the pound, and I think we need to retrace some of these steps. I think the pound is seriously oversold. It can stay oversold for as long as it likes. In theory, there's not even anything. There's no such thing as oversold. Markets will keep trending for as long as they want to, but we are in an oversold position. We're coming out of potentially coming out of an oversold position, but at major resistance. So that's a tough one to call. If you want to take a trade on the long side because you believe we can retrace on that, then 161.50 is a potential area, but keep your stop close and don't risk money you can't afford to lose. Alright, and let's just look at the DAX, because this is, whilst we had a blue bar yesterday, again we are still very extended. The 20 EMA is some way away. We may want to come and see 96 before that pops back up. Let's look at oil and gold. Oil is just not having it. Talked about this potentially seeing 90. Well, that looks on the cards. We are 91 is quite crucial, but 90 is begging, and we're not oversold, and we are just rolling over at the moment. Not looking to buy back into that until the end of the year. So we want to 7 extensions down there at 86.5. And the way that's going at the moment, that could go and see that. Gold, strength of the dollar is just killing gold, but 1250 is a nice big round number, which we're just narrowly under. So gold does have a habit of getting stuck in a range for long periods. When I say long periods, I mean 1, 2, 3 plus years. Do I think that can happen this stage? Well, we are certainly just at the bottom of a big box. So any close above 1250 might see it happen, might see it pull up. I am not looking at it. Alright, I hope that helps, and see you at the next update.